get this Instagram live started. All right, all right. We are now live, everybody. Well, I want to welcome you all to the Culture Shock Investments 2025 stock market projections. We're going to be talking about a few different topics today in regards to what to expect in the coming year. But we are also going to be talking about what happened over 2024. So we made a few projections coming into 2024, and a lot of those panned out well. And going from cryptocurrency to AI, a lot of those things we talked about in our 2024 projections, and a lot of it played out in 2025. The EV market didn't play out so well in 2025 as I thought it would. I mean, in 2024 as I thought it would. But I do see that still having a lot of development coming in the near future with a lot of the large automakers developing their EV lines to compete with Tesla. And then we had the Xpeng, I think they believe that's the name of the company in China. They're doing their EV cars. They're like probably the largest global competitor with Tesla. So you got to watch out for them. But this year coming up, we have a few different industries that we're going to look into that are going to be fire. Trust and believe. So let's start off with some flashbacks to 2024. I got the document here. We're going to go back and we're going to look at our 2024 journey. We had the soft landing. I know everybody remembers and loves the term soft landing. We were told over and over as the Fed continued to cut interest rates, they were guiding us into a soft landing that was going to avoid recession. All right. So we did avoid a recession, and the soft landing was, I believe, executed pretty well considering all the things that could have possibly gone wrong throughout those interest rate cuts. So the stock market had one hell of a year. S&P 500 is up over 20% this year. Actually 20% 2 out of the last 3 years the S&P has been up, which are amazing returns. So that means if you just bought the S&P 500 and left your money in there for the last 2 years, you would have got a 20% compounded return each year, which is amazing because the market usually returns you an average about 7 to 8 to 9%, honestly. So you got to be thankful for those 20% years. But we also can't get greedy, and we have to understand that after such strong rallies, you're bound to have a year of either consolidation when everything just starts to kind of go sideways as companies are reallocating their funds to whatever new industries are coming about and developing their new products, or you have a pullback where the projections for all these new products were overshot. And what happens is, like AI, they say they overshot the AI projections. And what will happen is the next year, a lot of those earning reports won't reflect the sales or of any new AI products or any large assistance from AI creating a sales boost. So that will cause a pullback or not causing a sales boost as expected or projected this year. So that will cause a pullback. So you got to be careful after major booms in the market and be a little more conservative in the years coming after following that because of that potential for consolidation and pullback. So I wouldn't go out there buying up everything at these high prices that you're seeing to start off the year of 2025. I believe we may have a nice little pullback in the beginning, first 3 to 5 months of the year as we get adjusted to the new president. You know, President Trump back in office, and his inauguration's on the 19th. Keep a good eye on what the market does around that time after he's inaugurated. See what the initial reaction is. and then that kind of will give you an idea what that first 3 months after his election may look like. And I predict it to be pretty volatile because he's talking about a lot of executive orders, a lot of changing of, I guess, laws and procedures surrounding particular industries. So you got to be careful, especially when it comes to cryptocurrency, marijuana. All those industries are going to be impacted by certain orders that he puts out when he first enters the office. So be careful out there. My guy Tony, Happy New Year, bro. So we got President Trump with that going down. We also have cryptocurrency blowing up this year. That was a major rally when everybody was scared of cryptocurrency in 2023 going into 2024. I was screaming for the black community to please start building up your ownership in Bitcoin, in Ethereum, just those two alone. Please build up your ownership in those. I want to pull up a Bitcoin chart. Let's pull up the Bitcoin chart really quick. Excuse my charts over here. I have a lot of stuff I look at. But we're going to pull up the Bitcoin chart. All right, I'm going to remove all my levels. I ain't giving out no free levels today. So, you got Bitcoin. We're going to look at it on a monthly chart. For those of you who are unfamiliar with how a stock chart operates, what I'm looking at here, each candlestick is representing a entire month worth of trading. So each one of these candlesticks represents an entire month. All right. Now, when I was talking about cryptocurrency heavily for the projections at the beginning of this year, that would have been right around this mark right here, right when Bitcoin was around $35,000 to $40,000. I was really pushing for us in the black community to start building up our ownership because I knew what was coming. You're gonna have you're gonna have the BlackRocks, you're gonna have the Chases, you're gonna have the banks, you're gonna have governments start bum rushing Bitcoin as an asset class to add it to their securities. So you're gonna see a lot of companies start to have Bitcoin reserves. And what that essentially is going to do for them, it gives them kind of a cushion of an asset that is still growing in value, but is providing the company some stability in case of a pullback in their industry. That Bitcoin reserve they have, they can help keep the company afloat because it's keeping a certain amount of income or a certain amount of capital behind the company, helping it retain its value. So even if the company itself is doing crappy, if they have enough Bitcoin held in reserve, it'll help balance out their numbers at the end of the quarter. So you'll see a lot of companies considering and actually jumping into doing that. And that same concept applies for a government. Governments buying Bitcoin, they're doing that to help boost their economies and provide another stable asset to hold. So a lot of countries hold gold. They'll hold in their reserves gold, silver. A lot of countries outside of the United States will hold the United States dollar in their reserve, just like we have a reserve of money that we hold within our country and assets that we hold to support the value of us as a country. So I see that happening a lot coming in the next year, and this happened a lot in 2024. Like I said, this was between $35,000 and $40,000 when I was really screaming out for everybody to buy this. And since then, since that date, I would say we had, let's look at the actual number. Where is it at? Where are we at? Right here. Let's go from January 2024 up until now. That was 137% increase right there. So 137% gain off of one asset that I told the black community to invest in last year. I hope a lot of people listen. I hope even those that weren't tapped into the space have awareness of the crypto industry, started to add to their Bitcoin reserve the same way the banks, companies are doing. A lot of the times you don't have to reinvent the wheel. You can just watch and replicate what governments and large companies are doing when it comes to these large assets, especially new asset classes. So even if you wanted to wait for Bitcoin to become adopted by governments and businesses, you could have did that within the last year, because last year the U.S. government and BlackRock started buying Bitcoin heavy in the beginning of 2024. And that was the signal right around this time when we got above these prices from 2021. These 2021 highs of 61,000. Once we broke above that high, as you see, we didn't really come back down below it after that. It served as heavy support. And that's what these candlesticks and charts are good for, showing you when you start breaking in and out of trends. So we got $64,000 or 60, let's say $60,000 as a support level. Once we got past that on January 1st of 2024, that was the time for all those people who were skeptical in the $30,000, $40,000 range. That was your time to buy right there, because now you're still a little bit late, but now at least you have the support and understanding that there are large institutions like BlackRock, Argentinian government, Chilean government. A lot of these governments and institutions are starting to flood a lot of money into this asset class. This was your time to buy. And even from then, even if you bought at $65,000, you didn't get the 137% return that you would have got if you listened to when I said buy in. But if you wanted to wait and be conservative, you still would have saw yourself get a good 55% return, which is amazing within a year's time. So outside of crypto, the next industry I want to talk to you guys about this year, which I believe is going to be similar to this crypto gain that we had, would be the eVTOL industry. EVTOL, electric vehicles for takeoff and landing. Electric vehicles for takeoff and landing. And that's the next major industry we have coming up, and I want you guys to stay focused into. They're already starting to create landing and takeoff strips, or they're actually planning for it government-wise with the Miami and California cities. They're starting to implement eVTOL laws, because they got to create the flight paths. They got to have certain laws in place before a lot of this stuff is fully implemented. So the technology could be there, the vehicles could be ready to go, but on government sector and government level, when it comes to clearances and air traffic control, that's something that they're going to have to work out. And it seems like they got that worked out in the Miami area and California first, and that's where we're going to see the EVTOL industry take off, the eVTOL. So this is going to be people pretty much taking air taxis. You think about Uber, this is going to be Uber in the air. People are going to be going back and forth to work. That work maybe 2 hours or an hour away from their jobs. They're going to start utilizing these eVTOLs, and it's going to make transportation back and forth to work, commuting back and forth to work, really easy for those people who can afford it, and it's going to be very convenient. And I can see it starting off with a lot of high-end people in the company using it, like maybe the CFOs, not the CEOs, not people who are making millions upon millions, but people who are making six figures or more. They're definitely going to start using this to avoid traffic and make it more convenient getting back and forth to work. So you want to make sure that you're getting exposure to that industry in itself. And then we got, well, for a company that's in that industry, I got ACHR. ACHR. Let's look at their chart. I'm going to be adding them to the portfolio this year. I just want to wait for them to break above a certain price level before I jump in, which they're getting ready to do right now. So if you're on my YouTube or you're on Twitter, you'll be able to see my chart. On Instagram, I don't have my chart up, but YouTube and Twitter, you'll see my chart, and you'll see that at $10. $10 is the price you got to wait for. Why $10? Because remember, I'm on the monthly candlesticks, and I like looking at my annual projections on monthly and 3-month candlesticks, but this company doesn't have that much history. But even on the 3-month candlestick, you can see that $10 is the support level, the resistance level that needs to be broken for this company to really take off again. So we're going to wait for $10, and we're going to go ahead and reinvest. We're going to invest in the eVTOL industry. Well, I am going to invest in the eVTOL industry once this $10 range is broken. And this is going to be one of the companies I look to do it within. If you look at them over the last month, I missed that wave. I'm one of the people that's like scared to jump into new industries. I always got to wait for reaffirmation, or I got to have some deep confirmation that this is going to be the next big thing, because you'll hear a lot of stuff when you're investing. Everybody's going to come to you with the next big thing, the next big thing. What's going to be the next big thing? You could take it at face value. I'd never take anything at face value unless you really trust the person. Always do your own research. But even in doing that research, if you come to like what you're reading and you like the technology, you get excited about it, sometimes you could still be too early. So being too early is just as bad as being wrong, honestly. Because sometimes you're too early on the industry and you could sit on it, and it could be years before this gains any true momentum. And in that years of time, you're missing out on gains in other industry, and then you're sitting here on either stagnant gains or losses in this industry you think is going to be so innovative in the future. So you always want to wait for, I think, institutional investments to start coming in, and you want to wait for government involvement. So once you get those two things happening, then you can go ahead and see that you can now look at the chart and say, all right, these two things are starting to happen and occur within this company. What price level do I need to look for in order to capitalize on or get my best entry? Now that I know legislation is passing to favor this, or I know big companies are starting to invest in it and they're holding large amounts of shares. EVTOL is one of those industries that the government is really backing. Not anything that I have a lot of institutional investors getting behind, but you do have ACHR. They do have some heavy institutional interest at around, which is why they probably took this big jump after the election. A lot of companies jumped post-election in November. You'll see a lot of November candlesticks looking really strong because of the election. I call this the Trump pump right here. So that's what you'll see. A lot of companies had a Trump pump in November. If they're in industries that people believe he's going to favor with legislation, which is why I said legislation or institutional buying are the things you want to look for. $10. That's a clean number too. I like that. But I could have got it early. I could have gotten it early at the $6.92 because, as you see, for 1, 2, 3 months, it's at around $7 without getting above it. And then once it broke above, we broke all the way back out to this next level of resistance. This is called a resistance level, where you see multiple candlesticks unable to get past a certain level. When it gets above here, that's when I'm gonna put my money in. So we got EVTOL, nuclear energy. That's the next one I wanted to touch on. Nuclear energy is going to be key. Nuclear energy, no, that's quantum. We ain't quantum computing yet. Hold on, we're not there yet. But nuclear energy is going to be a major player in the AI development, in the development of the AI industry. So if you look at some reports coming out now, you'll see that AI technology is starting to cause mass use of energy. It's consuming a large amount of energy to run things like ChatGPT, Grok, and all of these other big AI programs that are out there. So what these companies are going to have to start doing is sourcing their energy from somewhere that is sustainable. And the most sustainable source of large quantities of energy right now, as dangerous as it sounds, is nuclear. Nuclear is the cleanest form of energy. It's probably not the safest because you have nuclear plants in operation, but it's the cleanest form when done right. So they're going to be doing a lot of harvesting of nuclear energy in the next 3 to 5 years in order to ramp up production within the AI industry and to bring us more AI products. That's the second industry I wanted to let you guys know for 2025. Look out for nuclear energy, please. Okay? Right here, this is a company called URA. This is a global uranium ETF. I like ETFs. I don't like doing individual companies, especially when you're just entering an industry. You want to make sure that you are entering with the ETF. That's the best way to get rookie exposure to an industry that you're not very familiar with. I'm not familiar with uranium. I don't know shit about uranium. All I know is that nuclear energy is clean source energy that is going to be used to supply and power the AI boom that's coming. That's through my research, through looking at what companies like Microsoft are doing, what Google is doing. Microsoft, I believe, just they said they're projected to spend about 450 million on investing into nuclear energy. And that's probably just the first phase of funding they're going to do to get this stuff jump started and get in. After that, there's going to be a constant supply of either paying for more nuclear energy or paying for plant development to create nuclear energy. I think they're going to do a lot of jump starting of old nuclear plants that were shut down. They're going to jump start them and start pushing those as the suppliers. And then once all those old nuclear plants are jump started again, if they're still in need of power, you're going to hear about companies getting ready to produce and create their own nuclear plants in-house to provide themselves energy. Because right now they would have to go purchase this energy from a third party who already owns this nuclear plant, or they have to purchase the plant from them directly, which can be very expensive. But URA, if you look at URA, in the month of December, uranium had a big downfall. You know why? Uranium had a big downfall because Trump came into office. So like I said, legislation and institutions. So government and institutions are two things you want to watch. Government caused this pullback right here. Government, fear of government and what the government will be doing after inauguration caused that pullback, because people already know Trump is very much in favor of drilling and using oil and fracking to produce more energy within the United States and revenue. Now, I don't see that industry being able to supply enough energy and stay at a cost basis that is going to add gas and oil at a fair market value for the everyday consumers like me and you at the gas pump. If these AI companies start coming in and they start purchasing massive amounts of gas, you know what that means? That means there's higher demand. And we all know how supply and demand works. If that supply is not increasing drastically with the demand, all that's going to do is jack up gas prices. So I see that as a very short-term solution, and I don't think that's going to be one that is really implemented. And this red bar right here with this pullback, I think this is fear of what Trump is going to do as far as energy production. Logically thinking about it and understanding how much energy is going to be needed to run and operate these AI systems, I like to buy in on fear, especially when I do my research. This will scare the shit out of someone who didn't do their research and bought up here. They'll be scared shitless and they'll be selling right now. And then when this thing starts to recover, because if you look, this is catching the support right here at $27. So $27 I'll consider the support level. It's at $26.33 right now. So it's a little bit below support. I don't see it dipping too much further than 25, let's say $24.50. So you're really at a risk of about a 10 to 15% loss. If you get in here and you stop yourself out at $24.50, you'll lose 10 to 15%. But the potential gain here, after this market starts to get increased attention again, as people start hearing about how AI companies need nuclear energy to power themselves, this will take off again. And if you look on the long-term chart, nuclear energy had a let's go to 2024, pretty sideways 2024. 2023 ramped up. We had a nice increase from $20 to $26, which is about let's say $27 actually. Shit. So let's say we got 10, 20. Let's say it's about 30%, 35% increase right there. And then it went consolidation mode on us for the whole year of 2024. I like to see consolidation and it holding these support levels, because that lets me know our timing is good. We're in that good time and we're minimizing our risk for loss. So if we get in right here and we're stopping out down here, like I said, we're keeping our loss mitigated to 10 to 15%. That's the big thing I want people to take into 2025 is mitigate your losses. It's great having big gains. It's great having 0-day option trades go crazy for you. But if you're making 200% gains on $1,000 and you turn $1,000 into $3,000, but then the next day you jump into a 0-day and you take a 60% loss, and now your $3,000 is $1,300 or $1,200 again. it's going to be much harder for you to consistently hit those 100, 200% gains in the 0 day transaction. So I say avoid 0 days all through 2025. I know there's some 0 day warriors out there, and that's all you guys do, and you love 0 days. But 2025, we're trading less and cutting risk. All right, that's what we're doing here in Culture Shock Investments. We're trading less and we're cutting risk. If you want to trade every day, 2-3 times a day, God bless you. I hope and wish you success. But your chance of success is very slim to none, and you're fighting against a market that is going to be more times than not on an upward trajectory, and you're trying to play puts and calls on every day in between, trying to time these entries and exits. Long contracts are the plan for the year for 2025. Long option contracts, lowering risk, and decreasing the amount of trades. All right? So stay locked in on those three things: lowering risk, decreasing the amount of trades, and increasing the time length you are getting your option contracts for if you are an options trader, okay? Government bonds. I want to talk about government bonds. Government bonds is another way that we need to look at building some consistent, sustainable, long-term residual income. That was a lot, right? Consistent, sustainable, long-term residual income. That's what you want to build. That's what allows the bond market to be so much larger than the stock market. Is everybody with real money knows that bonds produce guaranteed returns. Yes, they're small percentages, 3 to 5%, but it's guaranteed. And then on top of that, you don't pay taxes on the gains that you make off of your government bonds. Taxes and guaranteed returns are the two things that people with wealth really care about. And if you want to be wealthy, you have to imitate the behavior of the wealthy. And if what they care about most are returns, guaranteed returns, and lowering taxes, you should probably shift your focus in that direction as fast as you can in order to replicate that level of success. If you're going to say, well, I don't have that much money, so 3 to 5% doesn't work out too well for me. Understood and understandable. But when you start getting into that income bracket, or when you do have that level of money that you feel like, okay, 3 to 5% can actually sustain me for maybe a year's worth of living or 6 months worth of living. At that point, when you see 3 to 5% of your portfolio can do that for you, is the time where you probably want to start shifting out of risk and more into guaranteed returns. Because right now we're very risk averse. When you first start off your portfolio, most people are heavy on risk. So that means you're buying a lot of individual companies. You're buying people out there buying penny stocks, people buying 0 day contracts, anything you can do to get that quick pump to your portfolio. But a lot of people fail to realize that you'll be into doing that for 2 years. And the person that was slow and steady just building their portfolio until they got to a certain level of understanding or a certain level of growth before they got more aggressive is going to outpace you every time. Now, are there times where you want to be more aggressive in certain industries and try to get in early, especially if you're an active investor? Yes, that's why we're talking about these projections or the eVTOL industry. That is something that will be an early play. That is not for the rookie investor who doesn't watch the stock market at all. You want to wait for certain price levels before you even enter that industry, which is why you got to join the Culture Shock Discord community, because I give you all those price levels. I give you what price levels to look for, and I give you the time that we're looking for to enter and what signs we're looking for to enter certain industries, okay? So you have government bonds for those people who do not like to actively manage their portfolio. Government bonds is consistent income, and is guaranteed, and is tax-free. So you can go ahead and still get some government bonds right now that expire within a year that are giving you 4.5% return, which is still very good considering that a 1 year government bond used to give you like 0.5% in return or 1% return. So up to 5% from 1%, that's a 400% increase in what they're paying on those bonds. That's a crazy increase that has been in place for about, I say, since about the pandemic, since right about post-pandemic, and they started doing those rate hikes in order to combat inflation. A lot of bonds started to go up heavy in the interest rates they were paying because a lot of people were escaping the stock market, were going into bonds because the stock market was too risk averse for them. There's too much volatility going on, especially for people who have large sums of money. They were trying to see those 10% dips followed by 15% gains. Yeah, that was too much for them. So to attract them to invest in bonds, those interest rates going higher, a lot of people started flooding their money into bonds at 5+%. And you don't get those same rates now. I'll pull up the bond site right now for us. We could go to treasury.gov. Let's see. Let's look at the treasury bill rates really quick. Oh, no. That's not the one I wanted to look at. Hold on. We're going to look at... Yeah, the treasury yields. Oh, so a good example. So I had this page bookmarked. I don't know when I bookmarked this page. But look at this was 2022. Okay. So June 2022, let's look at the 1-year bond. The 1-year bond in June 2022 is paying 2.16% interest. That was in 2022. That same bond, we're going to refresh this to today's chart. That same bond in 2024 doubled. 4.3% interest you're getting on that bond. A 1-year bond. Today, that same rate is 4.16%. That's on 12/31/2024. You're getting 4.16% on a 1-year bond. Meaning, these are all annualized rates. Meaning that these rates only count if you're holding these bonds for at least 1 year. So every year, on a 3-year bond right now, you're going to make 4.11%. What some people are doing, because these bond rates are so good, is they're locking in 1-year bonds and getting quick returns of 4.3% on their money annually. So they're flipping that year over year. And then, in order to lock in this rate and not get stuck at no 2% of what we were paying before in 2022, what they'll do is they'll buy something like a 5-year bond. So now for the next 5 years, every year they'll get 4.08%. And what are the likelihood that the bond rates increase past this? Is to me, I say unlikely because I feel like the economy is going into strength and we're about to have a lot of growth and expansion because of all the new technologies that are being introduced. So do I see the bond market holding as much strength over the next 5, 7, 10 years? Maybe not. Is it a good time to now stock up on some bonds that provide you that long-term stability? It is. Because like I said, bond rates are typically never this high for this short term of this amount of time to hold. So 2-year bonds, like I said, 1-year bonds, they usually pay much less interest. You usually get 4.3%. As you can see, the 1-year bond is paying 4.3%, and so is the 30-year bond. Usually you was getting 3.5, 3.8, maybe 4% on a good 30-year bond. Okay? But now what happens with these bonds is you could sell yourself. You could sell a 1-year bond after 1 year and collect your 4.3%. These bonds, you want to have to wait to maturity to get these full 4.1% off of these that you're looking for. And that's the risk you take. Because what happens is a lot of companies, what they did before these bond hikes started to happen that caused a lot of companies to crash is they bought bonds, 30-year bonds out that were probably like at 3.5%. And they thought that was a great return. And the next thing you know, the bond rates went up drastically. So now what are you going to do with your 30-year bond? You're going to have your 30-year bond sitting there giving your customers 3.2% a year when they know 30-year bonds are going for 4.3% now? No. So what the bank is going to try to do is they're going to try to sell off that 3.25% 30-year bond. And nobody wants it because nobody's going to buy a 3.2% bond, 30-year bond when they know a 4.3% is out there. So that caused a lot of banks to run into trouble. That's when we had that big banking crisis and a lot of banks were shutting down in 2023, 2024. It was caused by these bonds starting to jump up crazy, 300, 400% in value. Now, let's jump into AI, because we talked about crypto and the global adoption already, and where I see that going. I see that going worldwide. It's going to continue to expand. Every country that brought on cryptocurrency or Bitcoin as its national reserve has seen their GDP increase drastically, or they decrease their debt of their country drastically in a short period of time. And that could close the gap between a lot of third world economies and economies like the United States. That gap could be closed drastically if a lot of those third world economies start accumulating large sums of Bitcoin and holding them in reserve as the value goes up. They're going to close that gap, and they're going to become wealthier countries with more opportunity for infrastructure and growth. And in talking about bonds, you can buy bonds for other countries as well. So when you have opportunity for growth and expansion occurring on that level, you're going to see that a lot of these foreign government bonds are going to become more valuable because they are going to have Bitcoin reserves. So that's another gem I'll drop to you for 2025. It may require a little more research, or you could join the Culture Shock Discord group, and I could feed you this information for our monthly subscription, and you will know exactly what government bonds we're looking at around the world that are going to provide these returns. Not only provide or promise large returns, because a lot of government bonds globally may do that, but you have to know how good is that country's credit, essentially. Do they have a good credit score? Credit score, shitty credit score. And that is going to be determined by the bond rating. So you can have some AAA rated bonds, some AA's, some triple B's, some triple C's, and I will go over that with you if you're in the community. But you want to try to get as close to AAA as you can with an understanding of what that country is doing in order to build its infrastructure and grow its economy. And if you trust those two things in alignment, the bond rating along with what the country is doing, you could get some good foreign bonds at a nice discount that will tell you, like, you're buying the bond for $100 this year, but in 3 years they're going to give you back $2,000 for that bond. That's an amazing return. You can't beat that. That's like over 1,000% return on a bond. So if you see opportunities out there like that, sometimes when things look too good to be true, they usually are. But do your research, look into the country, look what they're doing. If they're a country that's building a large Bitcoin reserve, that's probably going to be a country I'm looking at. Hint, hint, to give you a hint on what kind of country foreign bonds I might be looking into this year, okay? So we'll go on to let's talk about geopolitical risks. So we know Trump is going to be our president this year for 2025 until 2028. We're going to have to deal with any laws that he puts in, and we're going to have to deal with his personality being in office. And as I tell people within the black community, the president is not dictating anything that really happens within our community. We have to take the president at face value of who they are and what they say they're going to provide, and look for anything that they provide that we could use as leverage to help increase our ownership and expand our mission as a community, as far as expanding our ownership and increasing the conditions of our neighborhoods, increasing our economies, increasing the education, providing more banking, providing more land, providing more communities, black-owned communities, providing more businesses. These are the things we got to see. What is this president doing that can benefit us in one of those sectors, whether it be education, whether it be ownership, whether it be banking, whether it be import or export. We got to look for what is this president doing that affects these particular industries or markets that we could take advantage of. It's not about who you like on a personal level. So we got to get rid and stop doing that. So with Trump in office, I foresee a lot of crypto infusion coming, a lot of money being infused into the crypto market, and a lot of opportunities. So you go ahead and keep your exposure high in the crypto industry. I would do Bitcoin and Ethereum, as I said. Don't go too crazy with all the meme coins and shit coins that people are going to be throwing at you saying, oh, you can make 10,000% here. Oh, you can make 200% on this coin. Oh, especially if you're not experienced in trading and investing. You are not to do that. because you will lose your money so quickly, or you'll get rug pulled, and you'll be looking for somebody to sue, and nobody will be able to help you. All right, so keep it safe if you're a newbie, but definitely keep exposure in the crypto industry and in the stock market as well. If you're doing stocks and you're someone who's just beginning investing in 2025, look for yourself. Look for some strong ETFs. S&P 500, the QQQ are some great starting points for ETFs. And then there are other ETFs out there that are more dividend focused. If you're looking for monthly income, there's ETFs that provide that. There's an ETF, I say, for almost everything. That's what I've come to discover. You can find ETFs for everything. And ETFs are pretty much just bundled companies that represent a particular industry or sector. And there's a financial industry, there's a financial firm out there that decided to create a bundle of these companies together and produce it as an ETF. So there'll be an electric vehicle ETF, there are computer ETFs, there are farming ETFs, there are cell phone company ETFs. So you could find an ETF surrounding pretty much any market that you have of interest, and look for the strongest ETF in that industry. And I would start there with your investments. You don't got to do the S&P, you don't have to do Qs. But I definitely wouldn't jump into individual stocks if you're just starting investing in 2025. And I would look for ETFs of interest in the fields of interest that I already have interest in. So if I'm already interested in, let's say, natural resources like water and gold or commodities. So I'm gonna look for a commodity ETF. I'm gonna look for an ETF that has exposure to gold, silver, water, that's giving me exposure to all the things I want exposure to, and I'll just buy that one company instead of buying 30 different companies and trying to keep up with all of them. No, just buy that one and keep pace with that. So we're doing less trades, more ETFs, more Bitcoin and Ethereum this year, and more ownership building. So outside of stocks and the market, I want us to focus on building ownership in some form or fashion this year. So if you're a business owner and you don't own the products or goods that you sell, make sure that you are looking for some way to vertically integrate yourself into your supply chain and become the owner of your supplies that you buy from someone on a consistent basis. If you're into land and property ownership, or if you're a renter out there and you're renting where you live, start converting your mindset into being a home owner or land owner, because renting is a dead-end road. It can be good for short-term purposes as far as because your money is tied up in this or that. But once you catch yourself renting for over 4 or 5 years with no ownership, you're now getting caught in the rat race. Because while you're doing all this renting, you're paying off someone else's mortgage for 3-4 years, and they're going to take your money and they're going to use it to increase their assets value. They're going to borrow against it, and they're going to get more property, and they're going to keep renting out to more people. You don't have to be a landlord. You don't have to have desire to be a landlord or be an owner and have hundreds of tenants, but you do want to desire to be an owner of a piece of land that is going to be able to bring you some residual income, whether that be through renting, whether that be through what you're growing on the land because you own a bunch of land. You may get into some kind of form of agriculture, or you may just buy a large plot of land and you can start selling off pieces of the land to different companies or people or farmers that may want to use the land for different purposes. Just find something to get ownership in. All right, so that's one of my keys for 2025, ownership. And that ownership can apply to stocks as well. It doesn't have to be land. Like I said, you only going that way if you don't want to own stocks. But the quickest and easiest direct route to ownership is to buy and own some stocks. You use an Apple device, you use Microsoft devices, you wear Nikes every day, buy the stock. Buy the stock and start building up ownership in the stock. You don't know where to buy, you're not sure how or where to get started. That's where we come in. You got to come to CULTURESHOCKINVESTMENTS.com or join the Culture Shock Investments Discord, and I will help guide you step by step on what you need to do to get your portfolio started. All right. Now, last gem I want to drop for you guys for 2025 is about stopping the losses. We have to stop allowing all the money and hard work we put in to be taken away so quickly because we're not doing proper risk management. If that's anything I've seen in 2024 that destroyed a lot of people in a year where the market was up 20% plus, is their lack of risk management. And people that could have had extraordinary years had okay years, and people who could have had okay years had terrible years because they had no risk management or a very poor risk management. This is investing and trading. It is not gambling. So you don't want to come in and start treating it like a parlay. I know everybody likes to do the parlays and sports gambling and betting, but this is not parlays. So don't come in here with the parlay attitude. The stock market will viciously, unforgivingly take your money over and over and over again if you let it. And you will eventually get the message that, oh shit, I have to develop some kind of strong level of discipline here in order to see consistent growth in my account. It's not about big explosive gains all the time, because I know people get caught up in the tweets that you see, people tweeting online talking about, oh look, I made 200% today. Oh, if you jumped in this trade with me, you would have made 1,500% today. That's all clickbait, because at the end of the day, what it's about really is not about hitting one off or two off or three off. It's about long-term 3 to 5 year consistency. If you can show me your track record for 3 to 5 years and you're hitting 50-60% trades every 2-3 trades you make, I'm going to want to know what you're doing in your trades, because if that was the case and there was someone out there doing that, I am almost positive. Either A, you will be hired by or be sought after by these large financial institutions. B, you got to be close to being a billionaire then if you're getting returns on that level and that consistently, because of how compounding works. So don't believe all the hype you see. Understand that when you hear people say things and you hear financial firms and managers say average return on a year is good to be 8 to 10%, they're saying that for a reason. These are people who've been investing and in the markets for 30 plus, 40 plus, 50 plus, 60 years almost. And they're telling you this for a reason. Now, it may seem like initially like, oh man, they just don't want me to catch on to the big plays or hit the big hits that they're hitting or hit the big licks that they're getting on the side. No, that's not the case. A lot of the times I used to feel that way as well as a beginning investor. Like, damn, I see all this great opportunity out here. Why are they telling me to stay so conservative when I could do this option contract that's a 0 day and make me 200% on Apple going up $1? It always looks good at first, but the risk management at the end of the day, I promise you is not worth it. So let's go ahead and build up our long-term holdings this year. Let's build up our ownership. We're going to build up our crypto holdings, Bitcoin and Ethereum specifically. XRP we're going to throw in there as well. We got to see how things continue to develop with them on the government side. I'm watching them more on government institutions to see how they're developing in those markets. But they do seem to be getting very close to being something I want to increase my holding in drastically in the next year if they get past a few more landmarks or barriers. And then we have, like I said, land ownership, crypto ownership, Bitcoin, Ethereum, XRP. We're going to look at bonds, government bonds, and we're looking at the EVTOL industry, EVTOL, and then we're looking at nuclear energy. All right, so those are the 5 keys I got for you for 2025. One more time, if you didn't get it: nuclear energy. All right, EVTOLs. All right, cryptocurrency. Okay, purchasing and owning land. And then we want to have more government bonds. It doesn't seem attractive right now, but I promise you, 4% on a 1-year bond is a great return. Great return, especially when it's tax-free. All right, so thank you everybody that came in for the 2025 economic projections from Culture Shock Investments. I always go deeper with my community, giving them information, so make sure you join that Discord if you need more guidance and information for the year. But I think with just those gems alone, if you really are a researcher and are a self-teacher, then you could do a lot with what I just gave you today. But if you're not, like I said, join the communities or book a consultation on our website, cultureshockinvestments.com, and I will be there to help you every step of the way. All right. So thank you again for coming through. I'll see everybody next year. Have a blessed, safe new year. And let's get this money in 2025 and build our ownership. We're going to make changes this year. Big changes coming.